GM. GM, 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 GM. So, daily levels, Sunday, 28th of December. Let's take a look here. Bitcoin moving up overnight, continuing the squeeze. Shorts are not getting let off the hook on the weekend. So I can clear this path now. We know where this path is meant to go. Target 2 above. Trade has played out pretty much as expected so far. And I mean, it's interesting from here. We grabbed all this liquidity on Friday, sold off into a trap, pushed up, closed now above it. Seems like it can squeeze up to T2, but obviously it's a Sunday, so weekend moves are not typically as reliable. Plus, it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 4-hour candles in a row with no pullback. So I obviously wouldn't get long here, but I'm keeping my long open with 43.5 being the target. It seems like it should squeeze towards that now. Seems like that's the liquidity it's going for, unless it's gonna just touch this breakdown point. That's another potential area for it to reverse from, which is set an alert at. If you go to the low time frames, you'll see that. I could see it today grabbing that and rejecting, and maybe pushing back down to take out some of that liquidity, and then possibly pushing up after. That might be a path it could take if it's going to trap some longs on the weekend, flush them out. It might not go all the way down there. It might just drop into the old T1 level. But that's just a rough idea. As for just in general, the markets, Bitcoin is now trying to reclaim a couple of key levels. It's back above the 50. You got the 100, you got the 200. So we came down to the 100 EMA. We lost the 50, touched the 100, held the 100, impulse back into the 50, consolidated for a day at the 50 with a nice inside candle. See here? So Friday's candle, we spent Saturday compressing between the 12 EMA, the 21 EMA, and the 50 EMA, and now we've pushed to the upside. That should produce an impulsive move higher. Again, always take a grain of salt with the fact that we are on a weekend, and weekends can be less reliable. Where am I looking here? Sorry, I moved that alert by accident. We're looking here at previous Thursday's high from the week before. You've also got the Wednesday's high, so it seems like it should keep pushing. But I want to check the data. I want to check the open interest and see how it's been moving on the weekend here, because we've got an OI divergence, all else being equal. If price keeps going up, it's fine. It would indicate shorts are getting squeezed out. But typically for continuation, you want to see open interest rising and price rising. So open interest is declining as price rises. That's telling you that as price goes up, positions are closing, which means longs and shorts are both closing. So with that in mind, I'm going to take another, if you remember, I got long at 38, well, I got long in a few different places here, but the average was about 38.7. That's 38.8, but roughly the average was, where we see here, the lows 38.4, and my average was around 39, not 38. Around 39.7 was where I entered. I took profit TP1 at 42k. We pushed up here, took 20% off. I like the fact it's moving up. I like that it's squeezing higher. However, the open interest divergence is certainly something that I'm aware of. So I'm going to take another 20% off, take some more profit up here, and that'll leave 60% of the original position open. As I said, there's nothing there that would make me overly concerned. I would still think that we can go higher from here, but I do think it's a good time to take a little bit of profit, and so I'll do that. I'll knock off another 20% of my original position. and we'll leave the rest on and we'll see where it goes. And funding rate, because the other thing I'll do funding, I'll put on the funding rate here. We'll see. Oh, I waited. Yeah, funding's dropping significantly. So this is definitely still an active squeeze. Question is, how far is it going to squeeze? Where are we going to? And I think it can go higher. I think it will go to this liquidity point, and then above that we've got a big gap all the way up to 45. So we'll see where it goes from here. Liquidations on the way up. Got a nice spike in liquidations here. No divergence on liquidations, which is good. So liquidations are rising as price continues higher. So we could see another push by that metric too. So yeah, BTC looking pretty good. But as I said, it's a weekend and don't fully trust weekend moves. So I'll take a little bit off there. There's going to be a CME gap when we open tonight. CME closed at 42,390 on the CME futures. So basically Friday night, if you look at it over here, that was where we closed. And so if I go back to the other chart, we closed around here. So CME gap's going to be where 10 p.m. about there. So if I put that in blue, market, that'll be CME gap, which would mean price could drop down into that level. And knock that one off. CME gap, leave that there. And this path is still possible as well. Price to come down, continue chopping around in there. The lower path, the lower path isn't going to happen from this level. We can obviously go lower, but not in the path that was drawn. And then the other potential path we could see is something like this. So this is like your ultimate bullish price path, where it pushes higher, drops back, consolidates towards the highs and breaks out. That'd be for like full bull. That's still not my base case. My base case would be probably that we're going to come back down and do some more reaccumulation in the blue zone, or around that 40,800 pivot. But overall, looking good. Zoomed out daily. Here we go. Remember where we're at, which is as low as 39, as high as 49, and especially above 40, we're in this main range of 40 to 48. The 40.8 pivot to the 48,000 pivot seem to be moving between those two levels. So looks pretty good for BTC at the moment. And we'll see. I think in terms of where people would have de-risked, when you're in a short squeeze, you're looking at where does price come up to and where can it potentially reject from. So if I just hide the indicators here and we just look at price alone, you have to now remember, like, where were spot buyers coming in? Because when you're in a short squeeze, it should keep squeezing shorts up until we meet strong resistance from spot sellers. Yeah, because the shorts are offside here. And like I said last week, I was talking about this. Shorts from here are pretty safe. Shorts from here are pretty safe. Shorts from here are kind of okay. Shorts from here are at risk. These shorts are already wrecked. These shorts are already wrecked. So, you know, if you have a short open from 45, you're probably okay for now, and that's how people will view it. And if you're above that, you're probably okay, because you should have support from the bearish side from spot sellers. Why? Well, let's look at where were spot buyers stepping in. Spot buyers will always be the ones that stop the dips, right? Whenever it dips down. So when it flushes down, that's leverage getting flushed, and it's spot support that stops it. So spot buyers, spot buyers, spot buyers, spot buyers. We would have had spot buyers all the way in here. So they were supporting. And why were they doing that? Well, they were doing that because they probably expected the ETF to be a much bigger event, on the launch. But in reality, we'd already gone up 100%, pretty much. Since the lows of August up to the highs, we were up 100% exactly. And so the majority of that ETF move was priced in. So if you were buying spot up here, you're probably going to want to de-risk it or sell it. And that'll already be happening here. I'm sure some of them are closing their spot bags. If they bought spot around here and then we flushed down, a lot of these guys were at break even around here. So we're above that. So if they've de-risked, they're now on the wrong side. The next level I would say would be up here, right? Where we had these highs, then we pushed up. So anyone buying spot around that 44 level, 44, 45, they were buying spot. We were above, so they were in profit. Then they got flushed out, but it's spot. So they wouldn't have to close. They just have to suffer being underwater for a bit. And as price comes back up, given that all of this, even as good as price looks now, you have to remember that all of this is breaking the structure. So right along there, the breakdown here broke the market structure. And when you're looking at it just from a trend perspective, we trend up, then we break. And when you break, you expect a lower high, all else being equal. So all else being equal, you're expecting lower high and then a move down. Whether that happens or not, I don't know. But that's the most likely place for there to be real strong resistance. Which would tell me that, given that we're now on the right side of the V here, right, prices has been going down, now it's going up. So we're actually back in a daily uptrend, an early one, but we are in a daily uptrend. And we're obviously in a 4-hour uptrend as well, and 12-hour and all that. But for a while there, we were in a daily downtrend. If you go by the interim low, let's say these lows here, before the break up to the ETF, right? There was the last daily low, then we broke out, then we lost that, and that put us into a daily downtrend. We went from higher lows and higher highs, higher low, higher high, higher low, higher high, higher low, based off the closes, higher high. Then we broke this first interim low, and we had a high, a low, a lower high, a lower low, a lower high, a lower low. So on the daily, we were downtrending. But now, we flipped that again to where, after breaking this level here, we've started into our early, very early stage daily uptrend again. Because there was a daily high there, then there was a low, and we've made a higher high. And so you're looking at price to continue or form a higher low, and you'd be expecting the uptrend to go. So early signs of price reversing. But like I said, with that higher time frame break of structure on the bears, in the favor of the bears, I could see this area, this sort of 44 to 45 is kind of my area to really watch as the most likely rejection point. So that's where I've got my eyes set. But there's an important thing to, you have to differentiate between your trade and your general market direction. So my trade was never supposed to be, I want to get every single dollar out of this all the way up into here, which is why I took some profit at 42, take a little bit more at 42.5. The idea is to scale out, because I got in nice and low, I got in pretty aggressively, I had quite a tight stop loss, and it's moving up. So the risk of trying to keep holding it all the way into